Welcome back to our podcast, everyone. Today, we're diving into the ever-shifting landscape of the financial markets. From tech stocks to Bitcoin, the volatility we're seeing is hard to ignore. Joining me today is our expert guest, who's here to help us unpack all these developments. Thanks for being here.
Thanks for having me. It's always a pleasure to discuss the latest trends and insights in the financial world.
Let's jump right in. Market volatility has been a hot topic lately, especially with tech stocks and Bitcoin under significant pressure. What do you think is driving this uncertainty?
Well, a lot of it stems from the Federal Reserve's stance on interest rates. As you know, they've been signaling a more hawkish approach, which tends to shake investor confidence, particularly in high-growth sectors like tech. When rates rise, the projected future earnings of tech companies become less attractive, leading to those sharp sell-offs we've seen.
Exactly. We've seen major players like Meta and Amazon take hits in their stock prices over the last few months. Bitcoin is also feeling the pressure, dropping below $30,000 recently. How do you see retail investors reacting to this?
Retail investors are definitely feeling the pinch. Many entered the market during the pandemic, riding the wave of low interest rates and stimulus checks. Now they're faced with a more challenging environment. Some are panic selling, while others are looking for entry points, hoping to capitalize on the downturn. It's a classic case of fear versus opportunity.
It's fascinating how psychology plays such a big role in investing. Shifting gears a bit, let's talk about some major corporate moves. Warren Buffett recently made headlines with his stake in Alphabet. What's your take on that?
Buffett's investment in Alphabet is quite telling. He's known for being cautious, so this bold move signals his belief in the long-term potential of digital advertising and cloud computing. Despite the current volatility, companies like Alphabet have strong fundamentals and revenue streams that can weather economic fluctuations. It's a bet on the future.
Definitely a strategic move. Speaking of major companies, AIG and Warner Bros. Are also undergoing significant changes. What should we be aware of with these companies?
AIG is transforming its business model, focusing more on core insurance operations and shedding non-core assets. This restructuring is aimed at enhancing profitability and reducing risks, something investors appreciate in times of uncertainty. As for Warner Bros., they're navigating the complexities of the streaming wars and shifting consumer preferences. Their recent content strategy reflects a pivot towards maximizing viewership through original programming and possibly consolidating their offerings.
Those shifts are crucial, especially in such a competitive media landscape. Now let's turn to consumer behavior. With the holiday season approaching, how are consumers adjusting their spending, particularly in light of rising prices and tariffs?
Consumers are definitely feeling the squeeze. With inflation rates hovering around 3.7% as of October, many are tightening their belts. We're seeing a shift in holiday spending habits, more emphasis on budget-friendly gifts and experiences rather than high-ticket items. Additionally, tariffs on imports are impacting prices, forcing consumers to reconsider their purchases.
It's a tough spot for many families. And what about the evolving policies surrounding tariffs and fintech? How do you see these impacting consumer choices?
The tariffs are likely to lead to higher prices on imported goods, which means consumers might shift towards domestic products or brands that absorb the costs. On the fintech front, we're seeing a rise in digital payment methods and budgeting apps, which can help consumers manage their spending more effectively. The integration of technology in personal finance is becoming more critical, especially in challenging economic times.
That's a great point. Fintech is really revolutionizing how consumers interact with their finances. Do you think this trend will continue to accelerate?
Absolutely. As technology advances, we can expect to see more innovations in the fintech space, making financial management easier and more accessible for everyone. This could lead to a more informed consumer base that is better equipped to handle economic fluctuations.
It's encouraging to see these advancements. Before we wrap up, how do you see the next few months playing out for both the markets and consumers as we head into 2024?
It's going to be an interesting period. We'll likely see continued volatility in the markets as the Fed navigates its interest rate strategy. For consumers, the key will be adaptability, finding ways to manage their budgets amidst rising costs and changing priorities. Those who embrace technology will likely fare better, both in their spending habits and investment strategies.
That's a solid prediction. Thank you for sharing your insights today. It's always enlightening to hear your perspective on these complex issues.
Thank you for having me. It's always a pleasure to discuss these topics.
And to our listeners, thank you for tuning in. If you found today's conversation helpful, don't forget to subscribe and share this podcast with your friends and family. Stay informed, stay engaged, and we'll see you next time.